The billion-dollar blunder. Why this once-hyped AI startup vanished overnight. In the cutthroat world of technology, where innovation is king and disruption is the currency, stories of meteoric rises are often followed by equally spectacular falls. Today, we delve into one such narrative, a tale of ambition, billions of dollars, and a sudden, perplexing disappearance. This is the story of a once-hyped AI startup that promised to revolutionize an industry, only to vanish overnight, leaving behind a trail of unanswered questions and a stark warning for the future of artificial intelligence. Welcome to the billion-dollar blunder. The year is 2025. The artificial intelligence boom is in full swing. Investors are pouring billions into any venture that whispers the words AI and disruption in the same sentence. Amidst this frenzy, a company named Builder.ai emerged, not just as a player, but as a titan. Valued at over $1 billion, with a war chest exceeding $450 million from giants like Microsoft, SoftBank, and even the Qatari government, Builder.ai was poised for greatness. Their promise? To make app development so simple, so intuitive, that it would be as easy as ordering a pizza. A bold claim, backed by seemingly limitless capital and the allure of cutting-edge AI. But beneath the gleaming facade of innovation and investor confidence, a different story was brewing. A story of financial mismanagement, inflated promises, and ultimately, a catastrophic collapse. Builder.ai wasn't just another startup. It was a unicorn, a rare beast in the tech jungle, signifying a private company valued at over $1 billion. Its mission was compelling: democratize app development through AI. Imagine, anyone with an idea could use their platform to build sophisticated applications without needing to write a single line of code. It sounded like a dream, a true game-changer for entrepreneurs and small businesses alike. The vision was grand, the funding was immense, and the hype was undeniable. But as we've seen time and again in the tech world, hype can be a dangerous mistress. The cracks in Builder.ai's seemingly impenetrable foundation began to show long before its ultimate demise. The company, founded by Sachin Devdugal, positioned itself as a pioneer in AI-driven software development. However, reports later surfaced that as early as 2019, Builder.ai was allegedly passing off human-built software as the product of its advanced AI. This revelation, if true, strikes at the very core of the company's value proposition and raises serious questions about the integrity of its technology. In an industry built on trust and innovation, such misrepresentation can be a death knell. The financial woes were equally, if not more, damning. Despite raising an astronomical sum of over $450 million, Builder.ai found itself drowning in debt. The founder, Sachin Devdugal, was reportedly responsible for accumulating hundreds of millions in debt, burning through the company's cash reserves at an alarming rate. This kind of financial mismanagement is a common pitfall for startups, but for a company with such significant backing, it points to a deeper systemic issue. The situation escalated dramatically when Viola Credit, one of Builder.ai's investment firms, took decisive action. They seized $37 million from the company's accounts, leaving a mere $5 million behind. This move effectively triggered a default by senior lenders, signaling the beginning of the end. Manpreet Ruddia, who had taken over as CEO from Dugal in March, inherited a company on the brink. He openly admitted to running the business with $0 in its US and UK accounts, a testament to the dire financial state he found himself in. Ruddia's tenure was short-lived and fraught with challenges. One of his first actions was to drastically lower the company's revenue estimates for the latter half of 2024 by a staggering 25%. This was a major blow to a company that had been built on the promise of rapid growth and high returns. The reality was far from the hype. The company struggled to find consistent and scalable revenue streams beyond the initial injections of venture capital, a problem that plagues many AI startups. Adding to the turmoil, founder Sachin Devdugal became embroiled in a high-stakes legal probe in India, named as a suspect in an alleged money laundering case. While De Gaulle denied the accusations, claiming to be merely a witness, the controversy undoubtedly cast a long shadow over Builder.ai, further eroding investor confidence and public trust. So, what can we learn from the spectacular implosion of Builder.ai? Its story is a microcosm of the broader challenges facing the AI startup ecosystem. The industry is rife with hype, often overshadowing the practical realities of building sustainable businesses. Many AI startups, much like Builder.ai, fall victim to several common pitfalls: lack of market demand or solving non-existent problems. A significant number of AI ventures develop impressive technologies without first identifying a genuine market need. They create solutions looking for problems rather than the other way around. Builder.ai's promise of app development as easy as ordering a pizza was compelling, but perhaps the market wasn't ready, or the execution failed to meet the lofty expectations. Data quality and availability. AI models are only as good as the data they're trained on. Many startups struggle to acquire, clean, and manage the vast quantities of high-quality, relevant data needed for effective AI. Bad data can lead to inaccurate models, poor performance, and, ultimately, a product that fails to deliver on its promises. High costs and computing capacity. The computational demands of AI development and deployment are immense. Training complex models requires significant investment in powerful hardware and cloud infrastructure, leading to exorbitant costs that can quickly deplete a startup's capital, especially if revenue generation lags. Talent gap and team misalignments. Building a successful AI company requires a unique blend of technical expertise, business acumen, and leadership. A lack of skilled AI professionals, internal team conflicts, or a disconnect between technical visionaries and business strategists can derail even the most promising ventures. Competition from large language models and tech giants. The rapid evolution of powerful, general-purpose AI models, often developed by tech giants with virtually unlimited resources, poses a significant threat to smaller startups. Many niche AI solutions can be easily replicated or integrated into existing platforms, making it difficult for startups to differentiate and compete. Misleading investors and hype versus reality. The allure of AI can lead to exaggerated claims and overhyped demonstrations. When the reality of the product fails to live up to the marketing, investor confidence erodes and funding dries up. Builder.ai's alleged misrepresentation of human-built software as AI is a prime example of this dangerous trend. Lack of sustainable revenue streams. Beyond the initial venture capital, many AI startups struggle to establish consistent and scalable revenue models. The path to profitability can be long and uncertain, leading to cash flow problems and eventual insolvency. Builder.ai's story serves as a cautionary tale, a stark reminder that even with billions in funding and immense hype, the fundamentals of business still apply. Innovation must be coupled with sound financial management, ethical practices, and a clear understanding of market needs. The AI revolution is undoubtedly upon us, but it's a landscape littered with both triumphs and spectacular failures. The billion-dollar blunder of Builder.ai is a powerful lesson for entrepreneurs, investors, and consumers alike. It underscores the importance of scrutinizing the hype, demanding transparency, and remembering that true innovation is built on substance, not just promises. As the AI industry continues its rapid expansion, only those built on solid foundations will endure. The rest, like Builder.ai, may simply vanish overnight.